Where we are now, we're going to double, we're going to double again, we're going to double again, we're going to double again. Bitcoin's going to continue to progress to $1 million a coin, $2 million a coin, $5 million a coin, $10 million a coin. And when it's $6 million a coin, there's going to be a bunch of people really angry at themselves that they didn't buy it at $1 million a coin. I think once you understand it to be the center of the financial universe, right? It's basically the fulcrum around which we all generate leverage. It is the frame of reference of all value and scarcity.
MicroStrategy CEO Michael Saylor gives us his price prediction for Bitcoin and why we'll watch the dominant crypto asset soar from 100,000 to 1 million to $10 million per coin. The upcoming Bitcoin halving event set for April and the impending approval of a Bitcoin spot ETF by the US Securities and Exchange Commission are two of the most anticipated events in the crypto market. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, we'll witness the approval of at least one Bitcoin spot ETF. This would mark an historic milestone for the Bitcoin community, a moment many have been eagerly awaiting for well over a decade. The green light for such an ETF would carry profound implications for the world of cryptocurrency and would serve as the gateway to substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Saylor envisions that this development will pave the way for large corporations to incorporate cryptocurrencies into their balance sheets. Let's get right into the latest interview with Michael Saylor and why Bitcoin is poised to revolutionize 2023 and the imminent transformations we can anticipate in the crypto market.
You can never have enough Bitcoin. I think the right way to think of this is Bitcoin is going to grow in a serpentine pattern with rapid burst of growth, some drawdown, but on an exponential curve. Right now it's like 45 or 50% compounded annual growth for the past 3.5 years since we got involved. And I think it'll just continue to grow at a high growth rate between 20 and 40 or 20 and 50% for the next 1 to 2 decades. And it'll gradually, the overall long-term growth will probably go from 45% annual to 40 to 35 to 30 to 25 to 20. And it'll hit a terminal growth rate of like 15%. And when it hits that terminal growth rate, maybe 20 years out, maybe 25 years out, it'll be growing twice as fast or compounding twice as fast as the S&P index or any other diversified, high-quality portfolio of assets you could buy. So if you think about it like that, you just say, well, where we are now, we're going to double, we're going to double again, we're going to double again, we're going to double again. Bitcoin's going to continue to progress to $1 million a coin, $2 million a coin, $5 million a coin, $10 million a coin. And when it's $6 million a coin, there's going to be a bunch of people really angry at themselves that they didn't buy it at $1 million a coin. And so I think once you understand it to be the center of the financial universe, right? It's basically the fulcrum around which we all generate leverage. It is the frame of reference of all value and scarcity. Once you get that idea, then the logical thing to do is just to continue to sweep your cash flows into it from month to month to quarter to year to year. You could call that dollar cost averaging, or you could just call it, savings. But, there's no end in sight. I mean, if I told you you could buy Bitcoin at 100,000 and it was going to go to 6 million and you were going to get 60x your money, then why wouldn't you? I think that the industry is going to be very dynamic. To be clear, if I had $1 billion right now to invest, I would buy Bitcoin. I wouldn't buy anything else. I wouldn't buy a building. I wouldn't buy an altcoin. I wouldn't buy a power company. I wouldn't buy land. I wouldn't buy real estate, I wouldn't buy a sports team, I wouldn't buy a Picasso painting. There's nothing on earth that I would buy other than Bitcoin if I had that money. I think everything else is risky. And I don't say you can't make money in those other businesses. You can. Bernard Arnault makes money in a lot of businesses I don't understand. And so I respect them all. It's just I don't advocate or endorse any of them. I think that if you're the best in the world at something, you know it. You don't need me to tell you. And if you're the best in the world at something, you should go do that thing. You'll probably make money in it. What I believe is if you're not the best in the world at something, and you simply want to make an investment and forget about it for 100 years, you buy Bitcoin and just be very careful about, how you maintain the keys or how you custody it so you don't lose the keys and the like. And then the market will do the rest of the work for you.
Saylor asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Saylor highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF.
When you think about investments that you're going to hold a long period of time, the two that stick out are, should I buy a diversified portfolio of companies like the S&P index, or should I buy a bunch of real estate? And if you buy real estate, like real estate in Miami Beach went from $10,000 an acre to $10 million an acre in less than 100 years. So that works out to be a 7 to 8% growth rate per year, every year for 100 years. And if you have that perfect portfolio of stocks and they're very competitive, then you might get something similar. But when you look at it, investing in stocks is very complicated. Like, name a company that'll still be here in 100 years. Like, how do you establish the S&P index? So if you take a 3-generation or a multi-generational view, it's kind of hard to figure out how I would buy a bunch of companies and hold them 100 years. But on the other hand, holding property for 100 years is very straightforward. And so now property is a good investment. And the reason property goes up by a factor of 1,000 is because if you look at it, what you realize is politicians can't make more of it. You can't print more property. The garden is the garden. The Sydney Harbor is the Sydney Harbor. You're not going to wake up and find out that there's 100x as much beachfront property as there used to be. So when the money supply expands by a factor of 100, and the number of acres on the beach in Miami Beach stays the same, the price per acre goes up by 100. And that's why property is a good investment. The problem with property is you have to buy it in chunks of buildings at a time or acres at a time, and sometimes the best property isn't available for sale. The second problem is there's property tax. So if you owned all the property in the middle of Sydney, you're going to get taxed on it by the mayor and by the province and by the country. And a lot of times people can't afford to pay the property tax for 100 years. And if I handed you $10 million and you lived in Africa and you had a choice, buy $10 million worth of property in Zimbabwe, anything in Zimbabwe for $10 million. You could pick anything you want in the entire country and buy it for $10 million. Or would you rather buy Bitcoin, $10 million worth of it? Well, the property in Zimbabwe, maybe it's scarce, but it could be impaired and it's not mobile. And maybe you don't want to live there. And maybe the people with the money in 100 years don't want to move there. So it's not clear that you'll be able to mortgage it or rent it or sell it or carry it with you. But on the other hand, Bitcoin is capped. Bitcoin is like Manhattan in cyberspace. It's 21 million city blocks in a cyber Manhattan, and one day 8 billion people will want to live there because everybody in the world, all 8 billion people in the world want to be wealthy. They all want to keep their money. There's no one that doesn't want Social Security and economic well-being, not from now to the end of eternity. For 1,000 years, people are going to want the money.
Saylor challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.